Hello and welcome to McQuilling TV. I'm Allison O'Melio, Marine Transport Specialist at McQuilling Services, and this is our first quarter tanker spot market review. Both the crude and clean tanker segments have exhibited signs of strength in the first quarter of the year. VLCCs have seen an average TCE of around $58,000 per day for AG East and around $56,000 per day for West Africa, China. Our proprietary fixture data showed roughly 542 vessels were chartered in the first 3 months of the year, 63% of which originated from the AG. Volume from West Africa to China is up about 18% year-on-year, as light sweet crude that was once headed to the U.S. is now being consumed by the East. India has also been taking this crude, and fixtures to this region totaled nearly 70. Latin America is also emerging as a crude export hub, with Brazil leading the way. The heavy crude produced in this region is increasingly being consumed by China as the Asian country continues to find ways to diversify its crude sources and as its refining complexity grows. This is certainly an optimistic indicator for the VLCC sector going forward, as the long-haul trip from Latin America to China will have a positive impact on ton miles. Global fixture activity in the Suezmax segment increased by 5% when compared to the first quarter of 2014, with the bulk of activity coming out of West Africa. India's continued thirst for crude oil was evidenced by a 45% rise in fixtures from the AG to West Coast India in the first quarter of 2015 compared to the first quarter of 2014. Spot rates are trending much higher than year-ago levels, as West Africa UKC has averaged roughly world scale 90 or $43,400 per day, while West Africa US Atlantic Coast averaged world scale 88 or roughly $43,400 per day. Black Sea Med rates have averaged world scale 98 or $51,000 per day. In a turn of events, the Aframax sector saw a 19% decline in global fixture activity, driven by a decrease in fixtures out of the Black Sea, Caribbean, and Arabian Gulf. The biggest decline out of the AG stemmed from fixtures to Singapore, as they fell 81% in the first quarter of the year compared to the first quarter of 2014. But that didn't stop spot rates from climbing well above year-ago levels. The Caribs U.S. Gulf benchmark averaged world scale 158, up 8 world scale points from the first 3 months of last year. Ullage and weather delays have been the main supporting factors behind the strong rates early in the year. And the Cross-Med market averaged world scale 119, or about $37,000 per day. Like their larger counterpart, the Panamax segment also saw a decline in global fixture activity, but only by 4%. There was a lot less loading activity out of Ecuador, the UKC, and East Coast Mexico, while the Caribbean saw an uptick of 46%. The Caribs U.S. Atlantic Coast trade averaged world scale 154, or about $29,000 per day, while the Caribs U.S. Gulf route traded at a 3-month average of world scale 154, or about $31,000 per day. Looking at the clean segment, LR2s saw an increase in fixture activity of 15% when compared to the first quarter of 2014. We recorded 28 fixtures from the AG to the UKC, a 150% increase, and there was also a notable uptick in cargoes in the UKC and West Med. AG Japan rates averaged world scale 100 over the past 3 months, up from an average of world scale 83 in the first quarter of 2014. The LR1 saw fixture growth of 14% with additional loading out of the UKC and Korea. Fixtures to Japan, West Africa, Singapore, and the AG all saw a significant increase, while fixtures to the UKC declined by about 31%, giving way to their LR2 counterpart. AG Japan rates averaged world scale 118 in the first quarter, up from an average of world scale 102 in the first quarter of 2014. The largest surge in activity has been in the MR2 segment, as counts increased by almost 400 fixtures in the first quarter of 2015 versus the first quarter of 2014. Volume out of the Baltic rose by around 71 fixtures, with shipments to the UKC accounting for a 150% increase. MR1s also saw an increase in fixture activity when compared to last year by around 50%. The growth is attributed to more fixtures out of the Black Sea, Baltic, and the Med. MR2 and MR1 rates have been quite volatile this year, and rates have trended much higher than levels that we saw last year. TC2 averaged world scale 141, or about $17,400 per day, while TC14 averaged world scale 89, or about $10,500 per day. And this wraps up our first quarter tanker spot market review. I'm Allison O'Melio. Thanks for watching McQuilling TV.